this guy claims that this is all the trading strategy out there. So I traded every single thing, and if you go and trade every single thing how he told you to trade it, you are going to lose all your freaking money, because I almost blew my $5 account to $0. But thank God I finally recognized the secret and I was able to take it back up, or less I'll practically be broke right now and homeless. So that's why I'm going to be showing you the do's and don'ts if you are ever even going to trade all these strategies. Starting from the first strategy, which is Fibonacci Kiniko. They tell you markets. It is a magical zone. If price gets to that golden zone, it will be respected perfectly. Like if those points are key level, we should all be billionaires here. Like all we need to do is just to mark that swing low to the swing high. Just plot the stuff. I will all be buying Lambos and Bugattis, just by waiting for pullback to golden zones while getting BGs in the process. I thought it was gonna be easy, so obviously I followed this advice and entered at exactly 38.2% of the Fibonacci zone, and I was in for a rude awakening. Like I no guessing, I was testing a strategy on gold. Even though I'm going to test a strategy, it should be on GBP USD. And I even maxed out the lot size, trusting this strategy, this YouTuber, because it has 1.2 million views, only to get my stop loss triggered. Like literally lost almost 70% on this one trade. Normally I was supposed to cut the video to when I started winning, but
breakout patterns.
I'm going to show you how.
It is when price makes a sudden and significant movement towards one direction. This usually forms after the market makes a consolidation period. For example, here we can see that the price is consolidating.
So basically when it's consolidating, you want to be watchful, and then before it breaks out, that's when you want to put your stop loss and then enter ASAP. That's literally it. But
most notable breakout patterns includes wedges, triangles, and the rectangle pattern.
I missed the breakouts. Like I took my tool there and then I marked that point there. This is what they call the trend line to Kiniko. You can find it on MT5 on your indicator, and then you can see slanted somehow. So then I took the other one and then drew out. I said, but the breakout has already happened, but I still decided to trade it, to take a gamble, because that's what I do. I take a gamble. Even if I lose, I still have enough capital to fund another account, so there's nothing to lose. And it's because of this mindset that I had that making people lose more than you're supposed to gain. I decided that okay, I'm going to sell to buy, which is sell at that point there, to get to my real entry and then buy there, so I can get two profits. Like it's insane how greedy we men are. Like I set my demands on, I legit set a buy limit at that point there. As per see, I be sharp guy. I want two odds for the sales, odds for the buys. Makes man okay, stuff like that. So I sold at the top, saying Kiniko, boy, you see the twist about this is crazy, because when I sold there, I thought I was gonna lose, but actually I bagged. But do you know that the main entry, which is that breakout entry, got me in loss? So literally, if I had not sold at that point there, I would have lost on my whole account on this one below. Like it's crazy when you think of it, but you can do the same thing tomorrow and then lose everything. So you are left to make a choice. Should you actually stick to risk management? Meanwhile, don't be greedy and stick to risk management, or sometimes be greedy, because it is going to pay you sometimes. Like this game is crazy, but if you keep carrying this greedy mindset when you are trading a big account, a very big account, that's when it's going to really deal with you. So I advise you, don't. But today I walked away with this with $0.66, which I later took back up. This is an advice. Don't sell to buy. I know what I'm saying. Don't sell to buy. That's literally gambling. So after crying for some time, I went to the next trade, to prove my legacy. They call me a beast for a reason. So I have to prove my legacy here and direct. And this is where we make history using the next strategy.
Double top and bottoms, triple top and bottoms, head and shoulders, cups and handles.
To get the bag, because price was clearly rejecting from that top there. You can see it rejecting for 1, 2, 3 points there, even 4 points there. So you want to tag yourself in when the nearest rejection is happening, so which is at that point there. You can see another rejection is currently happening here. This is like 3 retests to this side here, which in turn gave me insane racks in less than few minutes. Like, it's crazy how fast this happened, because this is reversal trading strategy that we're dealing with here. Whenever stuff like this happens, price tend to move very fast. Like, it moves very fast when price is rejected from the key level. So if you want to get quick profit, you want to be targeting those key levels, because that's where the liquidity, where the money is. Then this was when I closed and then moved to the next trade, and then went brutal with the execution button. Like, just kept smashing this shit, because this next confirmation is crazy. Not everybody trade this one, but if you do know how to trade this particular strategy, you are going to make a lot of racks in a very fast period of time, and also losses too. So basically, this strategy goes like
Elliot Wave. It is a theory that suggests that market tends to move in a series of 5 waves before reversing and forming another set of waves in the opposite direction. By understanding the Elliot Wave sequence, traders can predict where the price is heading by following the pattern. In a chart, we can label each point of the waves as 1, 2, 3, 4, 5 and ABC. In this chart, we can see that the price resembles a possible 1, 2, 3 Elliot Wave. And so, based on the theory of wave 4, which is that price tends to pull back to the 0.382 Fibonacci level before continuing upwards, we can use this as a potential buy entry when price makes a pullback.
And so basically, you don't want to be expecting your Elliot wave to be perfect, because price does not move perfectly. If it moves perfectly, you'll be able to spot those signs very fast, and market movers don't want you to spot it very fast, so they make it a form of tricky puzzle for you to fix or try and solve. So from the moment I spotted something like it, I started spamming sales, spam sales, and I was in for a good awakening. You can see how the price totally invalidated. I ignored my zone, started going up nice. We are close a sharp value, because I don't want to lose this account when I suffered to build it. You can see how it's even going. That's how you know from the way the price is going up, you know this is going to tear stop loss. If it's going slowly, you can like be looking at it that, oh, this one will come down. But if it's like bullish, like guys in the morning, you understand what I mean? You want to close very fast, or else you will lose all your account. So now we're back at $2 graph. Back at $2. This is the reality of trading, not all those ones that people are telling you. So you just have to have a very profitable strategy. I know this one will not matter, all this up and down, you will eventually be profitable, and I'll be teaching you how. So for this next one, we are going to be using
fair value gaps. A fair value gap occurs when a candle forms a significant gap due to an imbalance of buying or selling. To find a fair value gap, you first need to find a candle with a large body. Then, draw a rectangle at the gap. Place it between the previous candle's wick and the next candle's wick. This level now acts as a potential magnet, where price may revisit before continuing its movement.
Which is basically what I did. You can see I marked the FEG, the imbalance, the space within any candle, those jargons, everything they can call it. It's the space between two candles. And you can see that price was kissing the pods of the candle there. You can see it was kissing it. And the other confirmation I had is there was a break of structure above there, the BOS. So I knew that price has a high probability of going up, which it did at this point in time. You can see there was a good profit here. So I closed the freaking trade early, because I know price is going to reverse. You need to be able to take profit if sharp, and then I move to the next trade. And you want to make sure you are maxing out all the lot size. As it's increasing, you are maxing. As it's increasing, you are maxing. It's very simple. You don't want to be in ground level when your equity has already increased or your balance have increased. You now start maintaining one small lot size because you're afraid of losing. Look, if you don't take the risk, the money they are supposed to make increasing the lot size is actually going to be the risk. And why did I sell at this point here? And immediately I closed. As for the second one, I saw a fair value gap entry again. That's why I had to spam another set of sales. Like if you go to lower time frame there, you will see on 5-minute time frame that there was a fair value gap there and price has rejected from it before. So I was expecting that price is going to reject from it again on the next candle, which obviously happened here. You can see the sale happened very fast, and I walked away with another set of profits using the same strategy. So basically, that's to show you that you can use one strategy multiple times and you're still going to get the same result. Like maybe you might not get the same result every time, but at least you are going to be profitable if you trade it following a particular pattern every freaking time. And as for the end of this video, I ended it with support and resistance trading strategy. As for the remaining strategies, that will be in the part 2 of this video series. But for this one, I marked this resistance zone there because it was rejecting multiple times from that point here and literally had draw of liquidity in form of trend line below. That's to show you that 80% of the time price is going to go back down because this liquidity in form of trend line is serving as a magnet to draw price back down. And after seeing this conversation, boom, you can see there was a huge freaking profit here. And then I closed and tried to double down on the next trade here with the same strategy. That's it. If you see that something works, you want to make sure you double down on it. That's it. You don't need all these fancy drawings and all these fancy a particular time. If this started to work a particular time, a particular pattern, a particular clinic on a particular pair with news or without news, then you want to keep doing that. You can see how it was already going up very fast, and then when it's going up, you want to then keep adding. You can see even if it does not trigger, you go back, it will trigger if you just move up small. And then if you keep moving up, that's it. You keep giving it. That's it. And the best time to do this is when you are trading with news, because now like this, news is going to drop around to 30. At this moment in time, this was a reason when Trump, US are doing their news. A lot of posts used in Telegram and Twitter that say, don't trade, don't do this, don't do that. But you know us, we don't know the year word now. Stop. Now that time we're going to do our own challenge. It's that time that we'll be doing our own challenge because less more liquidity for us. You can see less than how many minutes is already up there. It's up there. It's very simple, free. That's why most times you need to do the opposite of what they tell you to do, because you don't know which is going to click. If people are following this way, you want to carry your head and follow the other way, because if they are following one way and they are losing, you that is doing the opposite of them, you will win. Is it? It is freaking simple. So I closed every freaking thing, and you know what I did again? I doubled down on that same strategy again. I doubled down on it and I maxed my lot size again. That's it. It's that simple. And in the next video, I'm going to be using all those other stuff. Those one contains indicators, pattern, and the likes of that. So I'm going to be using that one. And normally I don't trade with all those kind of bullshit, but I want to see if they actually work, so I can do content off it, because it looks weird. Like, what the fuck is all this divergence and the likes of that? I don't fuck with those shit, but I'm gonna do it for you guys now. So after selling, you can see key level. Price was literally at the key level, support and resistance. Very simple, sweet price action. If you zoom in, you can see the same thing I'm seeing. Sweet price action. That's it. That's what you want to be. Soft price action. You get your price action. You have your laptop on. You know, watching Netflix. You see what you like. You place your trades, and then just go back to watching Netflix and let the market do its thing. It's that very simple to make money when you know what you are doing. I see refreshing. It was still dropping. And people were losing at this point in time. As I was winning, that's how people were losing. But because I was at the right place at the right time and I knew what I was doing, and I'm a beast, and I choose to do the opposite of what others are doing, I bagged. So if you got value, like so, If you want to learn how to do this on a deeper level, click link in the description. If you want your account managed on the next video, click link in the description. I'll see you guys in my next video. Peace.